So hello everyone, thank you so much for joining us today. My name is Thomas from Just Log In, and we have Kevin as well joining from Reap. So today we'll be discussing how to manage payroll and cash flow during these tough times during COVID-19. So before I begin, I have a few housekeeping notes. So we had many people asking in the last webinar, which was the business continuity webinar series 3. This is series 3, so that's series 2. So today's webinar is being recorded. So we'll be able to share the recording and slides with you after the event is complete. We invite your questions. There's a Q&A box. You can post them. Please type all questions in that tab located in the menu at the bottom of your screen. The speakers will address some of the questions at the Q&A session in the last 15 minutes of the webinar. We'll be launching webinar feedback as well at the end of the webinar, so please help us provide feedback so we can improve these for the future. So with that, just a quick intro about me. So I've had around 3 years of remote working experience. 30% of the Just Login team is actually already working remotely. And for those that are in the office, we're allowed once a month to work from home. So we do have some experience in that. I've started a few tech companies as well. So with startups, it's very flexible. We worked from home before as well. And then education background from the US, Europe, and Asia. So I'll let Kevin introduce himself real quick.
Thank you so much. Thanks, Thomas and Just Login team for putting this together. A little bit about me. I'm Kevin, one of the co-founders here at Reap. We are a payments technology company that is based in Hong Kong, but also covers Singapore and helping businesses to make payments using their credit cards. I'll talk a little bit about that during my presentation. But about me, I come from more of a finance background professionally. Prior to starting Reap, I worked in investment banking, private investments across North America and Southeast Asia. And I started Reap back in 2018. I have an educational degree from both Canada as well as my master's from France and Singapore.
Perfect. Thank you, Kevin. So let's start with the presentation. So as everyone knows, coronavirus is impacting businesses from startups to SMEs to corporations. The economy is a bit of a standstill, but people still need to be paid. So it's quite important. Many governments now, including Singapore, Hong Kong, are stepping in to actually make sure employees have a salary to help them get through these tough times. So with that, we all know unemployment is growing. It's at an all-time high. Companies are cutting back costs, but that doesn't mean you should directly, retrench people and cut their costs. So that's why we're having the webinar today, because as Mark Cuban said, companies now responding, how you respond to this crisis will really define your brand for the next decade. If you rush in and one of your employees got sick, you'll be remembered as that company. If you didn't take care of your employees or your stakeholders and put them first, you were that company. So he warned that during a CNBC interview, but the Gartner VP of Advisory, Aaron McEwen, also had similar opinions. How you respond can have enormous implications for your employer brand, corporate reputation, and even financial survival. And that's why today we're sharing this webinar, sharing some tips, because one of the most important and essential processes we as companies, as HR admins need to do is pay our employees, pay them on time, and pay them the right amount. So there's two main problems currently with payroll. So first is, how do you run payroll when you're working from home? Do you have access to all the important documents you need? And how do you ensure you have enough money to pay them during this downtime? So I'll be going over the first part. It's something, people really take for granted. We just get paid every month. So we don't realize how much work is done by HR admins to actually set it up and get it going. And then Kevin will discuss the next part, going over government subsidies, loan options from Hong Kong government, Singapore government, and alternatives for cash flow to help you with that. So first one, how to run payroll during these times. It's becoming abundantly clear that essential function payroll plays in society. So if payroll stops, the ripple effect is huge. People can't pay for their rents, can't buy food. So it's really important that we continue paying our employees. So there's three main challenges. The first one is people working from home. Are the environments suitable? Because people are everything in companies. The second is, especially if you're using on-premise software, is it effective and flexible enough for you to do this from home or from your mobile app? And lastly, There's a lot of data security going on right now, so you really need to make sure you're compliant with the laws for payroll. So when discussing business continuity during this COVID-19, especially for payroll, it's important to look at these different areas when considering what to do. So the infrastructure, access to data, the IT infrastructure, and just really, do you have the right work environment for running this? So the first 2 points, payroll organization, staff availability. You should start asking your company, your employees, who is responsible for performing the payroll activities in each location, each department. What are the key activities and how are they performed? And are the effective business continuity plans in place for these different locations, either in-house or third-party providers? For staff availability, it's what percentage of payroll staff or their direct family members are affected by what's going on in COVID-19, and what is anticipated impact in cases of limited staff availability when considering care responsibilities. So do you have people standing by for backup in case the main HR person isn't able to perform the payroll duties, and who that is? So really it comes down to communication and having everything ready just in case. For the next 3, it's more on the arrangements, the infrastructure, what you need to do physically versus what you can do remotely. So working from home arrangements are quite important. Are the key HR, payroll, and financial personnel correctly equipped to work from home? Do they have access to laptops, to computers, monitors? Is their internet adequate with the bandwidth, with their connection? And do they have access to key applications, especially the data for the employees? IT infrastructure-wise, it's more on the security. So are there any key technical vulnerabilities or weaknesses that you should really address right now during this downtime? What are the HR payroll source systems and are they accessible remotely? Can a payroll input be received on time despite not being in the office? And is the IT infrastructure secure? And lastly, physical processes. What actual physical processes are there that need to still be done to run the payroll? Do you need to file any forms physically? Do you need to get employees to sign? And in case there's no access to these, especially in Singapore during lockdown, it's really hard to even get to the office. What are the impacts? How can they be mitigated? And how can you prepare so that you can run smoothly when you're working from home? Especially since we don't know how long this is going to last. And then lastly, it's access to the payroll data and actually releasing the bank payments, which many people now are doing manually through checks, cash, and bank transfers. Can those still be done right now while working from home? So access to payroll data, our last month's payment slips, pay slips, pay register, any general ledger files, are they accessible and ready for your HR admins to use at home? And again, is it guaranteed and secured where they're accessing it from? And for bank payments, is remote access guaranteed to release the bank payments to the banks? Or are there some sort of pauses or any technical issues you have to address there? And what is the process for authorizing exceptional payments during these times, like the payment procedures? So with all of these questions, you're keeping in mind on how to better prepare for HR admins to run payroll from work from home. There are a few different options. We suggest a cloud-based payroll. This is definitely one option because it allows access remotely, the mobility, integration with your current systems, and most importantly, the data security, so that the data from your clients, from your stakeholders, from your employees are all secure. So with that, I believe we have a poll to take to see how many of you are actually using cloud payroll already and how many are still using other ones. So just take a few seconds to answer. Are you using cloud-based payroll softwares right now? Yes or no? And then we can show the results immediately after.
In the meantime, Thomas, you want to take a guess what this ratio is?
Ooh, I'd say 60%. What about you?
Oh, I'm gonna go 75.
Pretty confident.
I don't know. I'm a fan of technology, so I think the people who are joining this webinar will agree.
Okay, let's see.
Ooh.
54%.
Okay.
So it's close to 50-50. There's quite a few people using on-premise software. So my next slide actually will compare these two. So it's good to know 56% are using on cloud. So going over the main differences for cloud versus on-premise, especially since we have a good half-half here with the audience. Three main differences are compliance, mobility, and maintenance. So compliance-wise, for on-premise software, you need to update your software version, which has to be obtained directly from the vendor and manually installed. Whereas for automatic updates for cloud, these are done and taken care of by the vendor and are updated with the latest government regulations. So you don't have to worry about updating it all the time and updating manually. Next part is mobility. So for cloud services, HR tasks can be done anywhere, and even some good softwares, they have mobile applications where they can do it on there as well, especially the software as a service HR cloud providers. Whereas on-premise, the HR tasks usually have to be done in a fixed location where the software is installed. And lastly, it's the maintenance. So this is a bit similar to the compliance where for cloud services, you don't really have to take care of the maintenance because it's being taken care of continuously by the vendor. So the vendor takes care of all software and server maintenance and security as well. Whereas for on-premise, you have to take care of this yourself, maintain it yourself. So the software patches must be obtained from the vendors and then installed manually. And the security server and data usually has to be taken care of by your IT department internally. So these are the main differences for cloud and on-premise. Of course, I think this audience is 50-50, but I'm gonna go over some cloud examples. So this one here shows a cloud payroll dashboard. It's quite simple. There's three main steps: preparing the payroll, processing it, and then accessing any reports. So these reports are generally used for finance and accounting people for forecasting and budgeting. But usually the process is the HR admin will log in. They'll prepare their payroll, so they'll put in information for their employees, especially the join date, which is quite important for generating CPF if you're in Singapore, MPF if you're in Hong Kong, and then also their basic pay, any additions, meal allowances, or deductions, and then generating the CPF, MPF, and then the bank file. So after you update the pay run with all the necessary information, you can click Generate CPF or MPF, fill in all the data for the CPF submission, the pay period, and then usually there'll be a file that's generated, which you take to upload to your CPF or MPF portal. So usually it's done for those with on-premise manually or in the office, but here you can just download the file and upload it to the online portal directly. So the same thing works with the bank file. So usually after you have all the information put into Cloud Payroll, you generate the bank file, put in the bank information. So here we're choosing DBS Bank as an example, HSBC as well in Hong Kong is quite common. And then there'll be a file that's generated. So this file works as an instruction to your bank to tell them how much to release for each employee. So you don't have to do it manually. You don't have to go in one by one for each employee and wire them, okay, here's how much you made this month. After this file is generated and you upload it to the online banking portal, that's it. It will take care of the rest so you can spend more time on other things in the office. The same thing goes for tax exports. You can directly submit taxes to IRAS in the system of many of the HR providers. A lot of the good ones as well have mobile applications, which is quite useful for employees and HR admins who want to check information on the go. It's still secure, and it's quite useful, especially when your employees are applying for credit card loans to help boost their cash flow at home, or maybe applying for housing loans, car loans, because instead of going to you and saying, hey, Kevin, do you mind accessing my last 6 months pay slip? I need to show the loan officer. I can go in myself, choose the last 6 months, last 12, 24 months, download PDF, and send via WhatsApp to the loan officer to get approved right there. So it's quite easy on mobile applications and very useful. So that's it for the payroll part from my end. I'm going to pass it over to Kevin to discuss the cash flow.
All right, thanks, Thomas. So I think for my section, I really wanted to highlight certain tips that might be helpful when it comes to cash flow, when it comes to paying when it comes to paying your employees' payroll. There's a lot of general tips that might be out there for cash flow in general, but I wanted to make this very specific to just being able to make your payroll expenses and how to optimize that for your businesses. Yeah, so I don't want to go too much into why this is an issue. I mean, I think you guys are all business owners or HR administrators. You know that payroll is probably one of your biggest expenses. It's one of the biggest resources that any small business would have. And going forward, as you think about, how to endure the coronavirus situation, how to go through this downturn, it's one of those things that is not incredibly easy to simply reduce. A lot of people think it's a variable expense that when times are difficult, you can cut back staff, you can cut back payroll, and when you are ready to expand again, you hire some more people. But if you think about how the employment cycle works, some of the your colleagues that have worked with you a long time, if you do simply just reduce them like any other type of variable resource, it can be very difficult to recover as you are thinking about coming out of this temporary depression of the economy. So it's not as an inflexible expense as people think it would be. So that's why there needs to be such a big emphasis on how do you maintain an appropriate level of cash flow to sustain your payroll expenses over this period. So the two sections that are broken this down into is what are the tactics that you can do internally within your business very immediately and does not require a lot of external decision makers that you can do to optimize for payroll cash in the next couple of weeks, in the next month or so. And then we take a look at what are some of the external options that you have. This includes the subsidies that are being granted by the respective governments that you guys are working with, the bank options that are out there, and what are some alternative finance providers doing to really help businesses during this period of time to augment their cash flow, to maintain their payroll expenses. So the first thing I want to go into is some of these internal options. Number one, this is very high level and generic across the board for most businesses, but I think you can really apply this to specifically payroll if that is one of your major expenses and one of the things that you guys would like to prioritize first. When business falls, when profits fall, that doesn't necessarily mean there is no cash left, right? There's no cash in the business for you to endure this period. There are a lot of different cash pools within the business that you can turn to in an emergency crunch like this to figure out how to allocate resources the best. So one of the most common examples is receivables, or what people would say, things that you're waiting to collect from your customers. Unpaid invoices, contracts. You don't necessarily have to go to an external third party as the first option to cash in on some of these cash pools, but you can start talking to your customers today, right? Asking them, hey, if you were to pay us cash today, and we know it's probably difficult for them too, would they be able to give you a discount for you to have that cash access immediately to cover some of the expenses that would be valuable to your business? And we also look at things like excess inventory. The inventory that you previously purchased in anticipation for a regular first quarter of 2020 may not currently be the most valuable asset to you. Would you be able to let go of that inventory to exchange into cash for you to cover some of the more unflexible expenses that we mentioned in the beginning, including payroll? And this also includes fixed equipment. If you have any type of heavy machinery, things that you've put on lease that you don't necessarily need during this period because of the lack of demand for the services you may be providing, that could be an interesting place for you to draw some cash out and be able to cover expenses that are higher on the priority list. Delaying other payments is very subjective based on your business. I mean, there are different types of people that can't really reduce fixed expenses like rent, like other types of supplier payments. But if there are possibilities for you to move to more of a variable nature for those expenses or delay them, that's also a source where you can maintain a little bit of cash within your bank accounts. And the very last one is something that I feel like certain people have overlooked, which is business interruption insurance. As business owners, I feel like a majority of you have some kind of general business insurance that you've purchased as part of regulatory compliance. And one of the most prominent features of some of these insurances that people don't typically look into is the business interruption part, or force majeure. In a situation like this, a lot of the policies that we have seen do actually include a pandemic or a situation like this as a coverable expense. So if you do have any recourse to be able to leverage some of that, to look into that, that could be another source of a source of claim of cash for you to manage your expenses in the next few months or so. Second part is internally prioritizing your payroll, right? After you've allocated all of your resources, you found the cash pools, talked to your customers, talked insurance, figured out where incomes are coming in from, figure out where they're going out to, especially on the payroll side. And what can you do? What can you actually support? And how do you prioritize that? It's not easy to consider because it might result in the answer that not everyone will get what was promised immediately. But it is definitely something that you need to have a very clear understanding of in case that situation happens, right? If this drags on for 6 months, who would be the first people that you would have to ask to potentially take a little bit of a cut or have a responsible retrenchment, as Thomas mentioned earlier in this presentation. So there are a lot of different factors that you want to consider here. Things like seniority. Is this person a very crucial high-level management of the company that if you did not prioritize and they left, would be very difficult to replace when you need to replace them at the end of this downturn? Would you be able to move people to more of a variable compensation structure? This is very, very interesting for a lot of the sales-oriented businesses that we typically work with. So instead of going from a fixed salary to commission-based, allowing them to collect on deals that they've brought in, it would be able to help them sustain their own expense on operating on your payroll. Full-time versus part-time, this is fairly standard nowadays. When business is a little bit lower, perhaps you don't need everyone on a full-time basis. Would you be able to move them to a part-time basis, and how do you allocate them? This allows you to spread out the expense and the actual commitment from your employees across all of them, so you don't have to just keep your full-time staff and let go of some other full-time staff. Staggered pay is a method that people use to essentially work out an installment plan for some of these payments, right? If let's say one of your salespeople has a large commission that they're waiting to be paid out for, can you have that be paid out over a period of time as opposed to a lump sum? Being able to manage your cash appropriately or match it to when that sales deal actually closes, when that customer actually sends you a little bit of cash, so you can match the cash flow profile for your employees' payroll. And very lastly, I think this is an important part on the prioritization part, and this really requires an understanding from both sides, because it's not just about you as the employer or you as the person who is making the payment to your employee. You also have to understand some of their needs, right? What are they able to afford, right? So because sometimes the people that may not be the top of the priority for you guys, who may not be making the most for in terms of income from your company, may be needing that cash the most, right? And these people will definitely need some kind of support. So it's really about balancing what is the business need, what is the business need from in terms of the payroll priority, and what is the personal need from that employee who is working for you, and what is their need for cash to sustain themselves. Because after all, this is a very, very human business, right? Because you're interacting with your colleague on a day-to-day basis. And if you want them to maintain this relationship and survive throughout this period, there is a lot of consideration involved for their needs as well. And that's a good point for me to go on to the next item, which is communicate your expectations, right? This is important for you to not just understand their needs, but also for them to know what your expectations are for this crisis. So I think staff and payroll is one of the most human aspect of running a business. I mean, customers, suppliers, they come and go, but the people that you work with, you deal with on a day-to-day basis, they spend 40 hours a week with you. So understanding what is going on is incredibly important for the people that you are you're sending the cash to actually. So discuss what is needed and what is possible. When you do that prioritization I mentioned in item 2, it's a great time to consider, hey, how do we start setting expectations so no one is caught off guard, right? If they're expecting this to last 3 months and you're expecting this to last 6 months, they could have very different expectations on what the payroll might be. And that could be incredibly difficult when the mis-expectation arises at the end of whatever period. So discuss the potential of reduced hours, delayed pay, some of the actual solution that you guys are working on will help you manage expectations a lot better so that when you do have to implement staggered pay, part-time, full-time, it would be a much easier conversation for you to have. So that kind of wraps up the internal options that I wanted to highlight. Of course, there are a lot more, but these specifically relate to payroll that I really wanted to bring up to you guys. And I think as an order of priority, it's always easier to deal with it internally. So these are internal stakeholders, people that you've worked with. So it's always easier to communicate with them rather than having to rely on an external third party. That being said, of course, there's still a number of great external third-party service providers that could help you. And this is what we're going to go into a little bit now. So government support scheme is definitely the top of mind for a lot of small businesses, both in Hong Kong and Singapore. And I think both administrations have done a great job in immediately responding and understanding what is the crisis here. Right? Payroll, employee salaries, a very, very big part of the chain that is the economy. Right? It's right before when it gets to end consumers, before they buy from other businesses who employ other employees. So this is incredibly crucial, and you can see by the amount of effort that some of these government schemes have put into the actual implementation. So in Singapore, I'm sure you guys have heard all over the news, but just to go into a little bit of detail about what the actual scheme entails is the job support scheme. So the first payout has actually started to happen, right? I've heard small businesses here in Singapore that have already received their April payout for their employees' job support scheme grant for the past few months, actually. So the government will cover up to 50 to 75% of an employee's wages, up to a gross of 4,600 Sing dollars. And this will cover for a period between October 2019 to July 2020. So it will happen on a 3-month periodic basis. And if you are filing if you're contributing to CPF and you're filing with IRS, you will be getting this automatically. For the 75%, the upper end of the range, you will have to apply separately because this only affects travel, aviation, certain hawker centers. So the ones that are most affected by this situation. That being said, given that 3-month period, there is still a temporary shortfall. You're not getting the payout on a month-to-month basis, right? So after you get this one in April, the next one that is coming will be in July, and the one after that will be in October. They will come in lump sums for the past 3 months of your employees' wages. So there still might be some kind of planning that is involved to figure out, hey, is that 3 months, will that last me the next 3 months? So really take into consideration and figure out if this is sufficient or if there are other options that you need to turn to during those 3 months or even after those 3 months. So plan for a few months of shortfall. There's a link down there for the government of Singapore on the actual job support scheme payout by IRS. You can track and you can ask questions. They've done a fantastic job with communicating what is the expectations around this. On the Hong Kong side, there's a very similar scheme for some of the small businesses operating out there. The government will cover up to 50% of an employee's salary, up to 9,000. The 9,000 represents the 50%. So the gross equivalent would be 18,000 Hong Kong dollars for the next 6 months. So this information is still relatively new. They're a little bit behind the Singapore administration in that they haven't actually set up what is the application process? How is it actually qualified? The very high level qualification is just that if you contributed to MPF, the CPF equivalent, you will be eligible for this. And it will be available in 2 payments. The first one is expected to come out before June 2020. But with 2 payments, the gap between both of those payments is now even larger. So you really have to think about when it actually comes out before June and the next time it comes out, is there enough cash for you to support? And as you can see here, the conversion ratio between Hong Kong dollar and Sing dollar is about 1:6. So the actual Hong Kong support scheme is a little bit less than what you would typically see in Singapore. So think about, what is the actual gross, what is actually covered about through this job retention scheme, and how you can make those ends meet with some of the other options that we'll be talking about later on. There's also a link down there for the Hong Kong equivalent of their job support scheme to provide you a little bit more information on when they expect to roll this out and the general high-level guidelines on what it means to be eligible for this. And then you move on to the second option, which is a little bit more external facing. External facing, it's not exactly full third-party lenders from the banks. They're also supported by the government schemes. So the government is injecting a lot of money through these banks to allow small businesses to access. In Hong Kong, it's called the SME Financing Guarantee Scheme, and it's offered by 31 banks in Hong Kong. Perhaps all of the major banks have a solution that is part of the SME Financing Guarantee Scheme. And they also offer up to 100% risk sharing with the government, which means in situations there may be principal forgiveness, which is very important for businesses that are using this to really cover their expenses. The total loan amount can be up to 18 million, and they will also provide you a 12 months interest-only period, which means there is no principal repayment. So you're only paying anywhere in the range of 2 to 5% per year on that facility that they're going to be able to provide you. In Singapore, it's very, very similar. It's loans supported by the resilience budget. The government has come out with 3. Part of this is a little bit updated by the unity budget as well. So in Singapore, the major banks have a little bit of a different approach. So for example, DBS provides a similar scheme to the one seen in Hong Kong, which is a 12-month interest-only loan. But there are also other providers like Hong Leong Finance, which provides a temporary bridging loan, which is more like a short-term facility for you to draw down on and repay back very, very quickly. So there's a lot of these options out there that previously would not have been possible without the government's intervention. Thirdly, this I think would apply to only a certain subset of businesses that are operating, which is to monetize receivables to external parties. In the first part, I talked about chasing your customers, asking them to pay you a little bit quicker by giving them a discount. This is the equivalent of doing that to a third party. Someone else will take that invoice off your hands. And there's a number of these service providers, both in Hong Kong and Singapore, who are now trying to provide the service as much as possible to help get cash into the hands of businesses faster. It can be provided by banks, but some of these new fintech players are also very quick to respond. It can take less than 2 days to apply. There would be some discount, obviously, on the amount that you're waiting to collect. But if it means getting you cash into your bank account immediately for you to pay things like payroll or rent, then it can be a very viable option as you go down the list of options that you are looking at. And very lastly, this is something that REAP currently works on, which is being able to make payroll on credit or make any expense on credit. Right? So we are working with businesses who have access to a credit card and allowing them to make payment from that credit card directly to an end recipient. So how this applies here in the particular case of payroll is, I can give you a very concrete example, right? So we work with certain manpower companies that provide outsourced temporary workers to larger conglomerates at shipping ports, at larger apartment complexes as security. And what happens is sometimes these bigger conglomerates don't pay them on time, but they still need to pay their part-time workers on time. So they have a temporary cash flow gap of, let's say, 30 to 90 days. And what they would do is they would use a credit card to make that payment instead, as opposed to drawing out cash from their bank account balance immediately. And this way, their part-time workers will get paid on time, and they're able to repay back that credit card amount once their customer pays them. So it's really a bridging gap for cash flow, for working capital. And in situations like this, we allow you to use it to pay to employees who typically would not be able to accept your credit card. So this is one of the solutions that you can use in conjunction with all of the other options that I mentioned earlier during this presentation to augment your cash flow to make sure your employees get paid on time. So before I wrap up my section, there's really three factors that I want to highlight when you're considering all of these different choices that I mentioned earlier. A lot of them can be used in conjunction. So if you have invoices to factor, if you have that ability, definitely look into it. If you have an application already going for some of the SME guaranteed loans, please continue with that. But if there were ones that you may or may not be interested in, it's really about, what is required, right? Are you able to access invoice factoring, right? If you are a more consumer-facing business, let's say a coffee shop or a restaurant, you may not be able to have invoices for you to actually go out and sell to third parties to get some cash in. And how quickly can you access it? As I mentioned, some of the government support schemes are great, but are you going to be able to wait 3 months to get the next payout? So do you need it now, or do you need it in a few weeks? Definitely something to really think about. And lastly is the cost, right? The government support scheme may not have a cost, but to bridge that 3-month period, would you have to look at invoice factoring, and what does that cost? Discounts can be high because they're providing you cash right away and they have to wait to be paid. So even the government support schemes on some of the SME loans do still carry an interest of 2 to 5%. While that is low, it is still something that needs to be factored in. Is that something that you're willing to bear for the next, 3 to 4 months? And that concludes my section. I think I'll hand it back over to Thomas to talk a little bit about how we're working together.
Thanks, Kevin. Very substantial and great information on the different loans and options for companies to consider. Really useful to look at the requirements, speed, cost, not only for cash flow, but also payroll. So how are we working together with Just Login and Reap? We actually created integration that makes it very seamless to run your payroll on Cloud Payroll, process it, and go through Reap to pay your employees. So here from Just Login, when you generate your bank file, instead of choosing a bank, which we have many gyro formats for the major banks in Hong Kong and Singapore, you choose Reap payment format here. So once you choose that and you generate file, you'll receive that file. So here you can see it's exported. And then what you do is when you log into Reap, you just upload that directly into the account. So if you have anything else to add in here, Kevin, for the Reap part, because you're the Reap expert, but it seems pretty simple and straightforward once they log in.
Yeah, so once you log in, we only have, I guess, one major function, which is to make payments. When you create a payment, you need 3 things. So a recipient to pay to. In this case, it's the file that is being generated out of Just Login. It will give us a list of all of your employees that you're trying to make payroll to and their bank account information. The second thing that you need is a credit card that you want to pay from. So you would add a card or select a card that you've already added. And then the third thing is just to send that payment through. We would process the file that has been uploaded and generated by Just Login. And then for each individual recipient, they would get a bank transfer into their bank account within 3 business days. And they would be able to access that cash immediately.
Perfect. So that is the integration in a few minutes. So far, it seems very seamless, very straightforward, and easy to use. So before we go into Q&A, which I know a lot of you have questions for Kevin on some of the business insurance and loans, let me take a time to promote our next webinar video next week. So this is number 4 in the business continuity series, How Are Businesses Coping? It's a panel discussion with really great companies such as Recruiter Pal, Lean Bento, and Prive. So definitely sign up. Again, we'll also send you this webinar. You can also view the previous ones online as well. And then after Q&A, don't forget to fill out the form for feedback so we can improve for next time. But with that, let's go to Q&A. Let me open.
All right. I guess I will take this first one from PPCI about business interruption insurance. The question is that, would this affect future premiums payable if, let's say, you claim something under COVID-19, and would that increase future years' premiums? I'm by no means am I an insurance expert, but I can say from a risk perspective, how this typically works is that when you make a claim and when they adjust your premium, it's based on how likely is this to happen again. So in health insurance cases, let's say you have a lung issue and then you claim something under that. Next year, they would raise your premiums because you're more susceptible to that lung issue in the future. But for situations that are more force majeure, that are really unforeseen, some people call this a black swan event, it may not necessarily be the case because they don't expect this to happen immediately again in the next year, right? So it's really about their expectations of this and how likely it will repeat into the future. Now, that being said, if this continues, if this is like something that happens every single year, there's an outbreak, then yes, the possibility of an increase in premium is very, very possible, but I don't see that happening for most businesses. Or if it happens on a continual basis, I'm sure they will exclude it from a force majeure event or one of these really one-off events that you can claim under.
So I think that also answers the next question from Chung Peng about elaborating on the business interruption insurance.
Mm-hmm.
And can the reduction in income due to COVID-19 claimable under this policy?
Yeah. So reduction in income as in your like loss of business income, right? Loss of business income. This is sometimes it is covered. Yeah, so it's definitely possible because the business interruption insurance can cover major unforeseen events, things like natural disasters, earthquakes, tsunami. Could this be considered one of those? It can be argued, right? And we've seen people argue this with their insurance provider for a potential payout. So it depends on what your policy wording is. I would say definitely take a look at it. It might not necessarily be 100% there, but if you have a sufficient case with your policy wording, you can definitely claim something like this.
Great. And then the next 2 questions are from Shruti. So for payroll on credit, what is collateral needed?
What is collateral needed? This is based on your credit card limit. So if you have a corporate credit card with sufficient limit to cover your payroll expenses, we would be able to do so, right? And it's based on your established credit with whoever provided you that business credit card, whichever bank is you're currently working with. They have allocated you that limit because they believe in your business's ability to repay. So there is essentially no other collateral that they're asking for.
Great. The next question from the same person, what is the monthly cost for this integration? So I think that's twofold. I mean, first you need a just login subscription, which we can discuss after this webinar. It's case by case and based on how many active users you have. And then the second part would be from Reap.
So for Reap to have an account is absolutely free. How we charge is on a per transaction basis, and we charge a percentage transaction fee, and we can discuss that offline. But the actual integration to generate a file if you already have a just login account and to upload a file if you already have a Reap account, that's completely free. Yeah.
Great. And then the last question we have here. So if you have any further questions, please type them now, or you can also message us after this webinar. Loans with Singapore banks, do they need to be guaranteed by the directors, shareholders of the company?
For Singapore banks, it's not a standardized SME and financing scheme as you would see in Hong Kong. So this really depends on bank. The two examples that I mentioned there, DBS and Hong Leong Finance, I believe the latter does require not a personal guarantee, but a director guarantee. You may have to look into that one. And for DBS, however, I believe it's only purely a business risk. So they would have 80% risk sharing on just the business.
All right. So that's the last question from this Q&A tab. If you have any more, feel free to reach us directly to just log in to Reap, and then we'll be more than happy to set up a follow-up meeting or answer your questions over the phone. With that, don't forget to fill out your feedback form after this. Thank you so much for joining on behalf of Just Log In, Reap. We really appreciate your time and wish you all the best during COVID-19.
Thank you so much, everyone. Thanks, Thomas.
Thank you. See you all next week.